Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, June 23rd. That's June 23rd of 2023 at 1 p.m. Eastern. Well, U.S. business activity fell to a three-month low in June as services growth eased for the first time this year and the contraction in the manufacturing sector deepened, survey data out this morning showed. The S&P said its U.S. Composite PMI Output Index, which tracks the manufacturing and service sectors, fell to a reading of 53.0 this month, the lowest since March. Nonetheless, it was the fifth straight month that the PMI remained above 50, indicating growth still remains in the private sector. And now let's go on to more charts that will give us some insight into the week to come. First of all, we're going to look, as we always do, at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $434.76, or about $43.47 on the S&P 500 itself. Now, the all-time high was in January of 2022, and that came in at $479.98. So we're currently about 10% from that all-time high, so looking better certainly than we did in March or so. Now, from its breakout in May, we know it consolidated, the SPY did, for quite a while here, waiting for the debt ceiling negotiations to be finished and Fed interest rates changed or not. So we consolidated for quite a while here. After its breakout in May, right here, and you can see it was moving up and then really broke out beautifully. From its breakout in May, after the debt ceiling negotiations concluded, the SPY continued a bullish move that rose. You can see how we kept on going here. Then it moved up even steeper to an intraday high on June 16th. It was right here is June 16th. The intraday high was $443.90. And that was when the Fed paused its hawkish stance on the interest rates and didn't raise rates for that particular session. Since then, we have learned that the Fed intends indeed to raise rates 2 more times in the near future. We'll have to see how that works out. Now, from this high here, it makes sense. We were overbought. We talked about that quite a bit. From this high, we're seeing a pullback, which was expected. I mean, when you go up this steeply and you're that overbought, profit taking is going to come into it. So we're seeing a pullback, again, which was expected. The RSI had become overbought. It's a signal we've been talking about for the last couple of weeks. And at the moment, the RSI has fallen back down below the 70 line, which I really wanted to see, to where it is now at about 60.63. And that's more bullish again. We don't want it up too high because that means it's too good to be true, and profit taking at some point is going to come into it. Now, however, the SPY is in an uptrend, and as we talked about last week, the definition of an uptrend is something you always want to keep in your mind. An uptrend is higher lows and higher highs, but the word lows are in there, and if the market doesn't come down and profit taking come in, it can't go back up again. So we always look for either consolidations, as you see here, when price moves sideways, or pullbacks when some profit taking comes in. That's how it keeps its power, higher lows and higher highs. Now, it is trading right now, the SPY is above the 20-day moving average, the red line, the 50-day moving average, the green line, and of course the 200-day moving average. And that's a good thing. Now, to remain bullish, we do want the SPY to stay above the 50-day moving average, which is coming in right now at $419.45. Call it $420 if you want to round it off. We do, to stay bullish, you always want your asset to be above the 50-day moving average, just in general. You can see that the 20-day is almost drawing a trend line right now. for the SPY. Now, I don't consider this consolidation a low, as in higher highs and higher lows. If price falls below that, I don't consider that a low. But I am looking here at the 50-day moving average as important support. So price resistance up here sits at about 444, which is about what that all-time high was. So I just rounded it off. So that's price resistance. If we start back up, price support, we can say at the 20-day moving average, which is at almost about $430 right here. That's potential price support. Then we go down here to 426 or so, right down here, right in this zone here. Then we have the 50-day moving average again coming in at $419.45. And on down from there. So we've got plenty of support coming in here. Due in the coming week, keep an eye on this SPY, and let's determine whether it can remain in its current uptrend or not. And do know that stocks will follow it higher and will follow it lower. Okay. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this is the exchange-traded fund that closely follows our very important NASDAQ 100 index. Those are the top non-financial companies by market capitalization in the NASDAQ. The big movers like Alphabet, Amazon, NVIDIA, AMD, Tesla, that whole group. Now, when I captured this chart today, the QQQ was trading at $364.24. The all-time high for the Qs was November of 2021, and then it came in at $408.71. So we're about that's about 11% higher than we are today. So we're inching our way back up toward that. Now the Qs have been in an uptrend here since March lows. The uptrend we're going to look at any rate since the March lows at 285. And we know that it shot up here to the 320, 321 level, then consolidated for a while through April. The SPY consolidated much longer, but the NASDAQ took off faster as in the face of debt negotiations, it took off faster and kind of walked up the 20-day moving average here. Ignored the debt negotiations pretty much and climbed at a pretty steep angle. As you can see, it moved up dramatically here to this intraday high on June 16th at $372.85. Now, we know, again, that down here, the 14-day RSI, we know that became, we talked about it here quite a bit, that it became overbought, moved up pretty dramatically here, and we can see different places here where it became overbought, then pulled back, and here's another good definition of an uptrend here, higher highs, higher low, so far higher low. So we want those higher lows to continue. Now it's sitting right on, or close to, I should say, the 20-day moving average. The RSI is back below the 70 line at right about 65. We do have resistance up here again at 273. Should it start higher, support at the 20-day, then down to 348, down here to 348. We have some support there. We've got the 50-day moving average coming in, as I said, at 336, and on down. The Qs are in an awesome uptrend right now. Will it continue? We have no way of knowing because none of us, and that is true, none of us can see the future. We can make educated guesses, but we can't see the future. If this holds and keeps going like it would be great if it would, it will bounce off of the 20-day moving average and start higher. That would be the good news, but we have no way of knowing if that will come true. So please trade carefully. It's in an awesome uptrend, but please trade wisely and keep an eye on your stops. Our final chart today is a ProShares daily chart of the ProShares Online Retail ETF, the ONLN. For our purposes today, I'm just going to call it the online. ProShares Online Retail ETF. It looked like a decent setup here. It has 25 holdings. The top holdings include Amazon, Alibaba, eBay, Wayfair, and DoorDash. Now, when I captured this chart today, the online was trading at $32.02, just atop its 20-day moving average. It made an all-time high that you obviously can't see on this chart. It made an all-time high in February of 2021 at $93.45, quite a ways up from here. And I've been watching it a bit here. It made a recent high, February high, and look how it scooted up here from the December lows when we got into January this year. I mean, it just flew almost straight up. And when price goes straight up, at some point it starts coming down pretty dramatically usually. You just have to know when the when is. So it fell down pretty dramatically down to its March 13th low, and that was at $27.96. So that was $38.98 down to $27.96. Then it moved back up. It jumped up, went back up through the 20, and it went back up to $31.74. Then it fell down gradually again. It retest the lows, didn't get all the way back down there, but very close. Then moved back up, and then back down again to 20 right here to $28.82. So that's higher than the low of $27.96 for sure. So it made some little higher lows here, which you know I always like. Then it started up and it held. I like this because actually, look, there's one low here, a little lower, a little higher, a tiny bit higher, a tiny bit higher. So the buyers are coming in here before it gets all the way down to these lows. And I like that move. Again, then it moved back up through the 50-day. The 20-day crossed the 50. That's good. The 20-day crossed the 200 a couple of days ago. That's good. And again, it moved up to a high of $33.30 right here recently. Then in the last week fell down to where it is now at $32.02. So if in the coming week, the online can stay above the 50-day moving average, which is now coming in at $30.44, and I realize these other two moving averages are here, but I'm going to use the 50-day. If the online is able in the next week to stay above the 50-day moving average, coming in at $30.44 right now, and if the market behaves reasonably well in the next week, I will probably add a small position of the online to my trading portfolio, and my stop is going to be down here under the 50-day at $30.25. If and when the online raises up and tries to get over this prior high, excuse me, meaning it will be in an uptrend, if that happens, I will add to my position, and of course by then I will have a trailing stop. So you may want to keep an eye on the online in the coming week. Finally, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs like our popular flagship product, 7 Steps to Successful Trading. Plus, if you'd like to learn how to swing trade, and this is a great market for that, we have a program for that. If you'd like to learn how to trend trade, which is one of my favorites, we can do that. We've got a program on bottom fishing, which is good right now because we've got some opportunities out there. We've got how to read charts, 3 winning setups, and many, many more. You will find out how to elevate your trading skill set and increase your gains quickly and easily. To see all of my online training courses, simply go to the link on the screen up here, or easier still, click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.